Hi, I'm Josh Cohen, and I head the institutional defined contribution business at Russell. I'm joined here again in my kitchen with Mike Berry. Mike is the president of Plan Advisory Services, and Mike works with Russell as well as other plan sponsors to help them understand the public policy and regulatory issues around retirement plans. Mike and I talk a lot about retirement issues, and one issue we didn't tackle last time because it's so thorny and contentious is the whole tax issue as it relates to the retirement system.
The theory of the people that are attacking the current system is that the incentives are upside down, that for the high-paid people who don't really need to save that much for retirement because they already have a lot, get all the tax benefits, and low-paid people who do need to save don't get tax benefits. That's the criticism fundamentally.
But don't we already have things like non-discrimination testing to try to take care of those things in the system?
Yeah, that's right. And one of the frustrating things when you hear people take that stand is that they leave out that the tax deal involves this other piece, which is that the plan has to be non-discriminatory. So while the tax benefits clearly go to higher paid people, who in fact are the people who are paying taxes, that low paid people are under the plan are getting benefits, and that's the trade. You don't get tax benefits for your high paid unless low paid also get real benefits.
But so these proposals that want to deal with this upside down tax code want to basically change how this $400 billion is essentially spent in the system today. How would they do that?
Well, the proposal is to change the current system of tax deductions, which if you pay higher taxes, then you get a bigger deduction, to one of tax credits, where you don't even have to pay taxes in order to get a credit back from the government to save.
So really what they're saying is they're going to take this $400 billion in these proposals and change how it's spent and have that money more spent on lower paid employees.
Right. The irony, though, is that while it's unlikely that they could get enough support for changing the tax deal in that way to take part of that $400 billion and start giving it in tax credits to lower paid employees, they do undermine support for the current system of taxation, the current tax deal for retirement plans and critically 401k plans.
Isn't this a bit of hocus pocus accounting, though? I mean, really what these benefits today are tax deductions. They're not permanent losses in revenue to the government. So why do they think this is a big tax savings for the government's coffers?
Yes, that headline number has been widely criticized because of the congressional budget methodology, which is based on a 10-year window. Obviously, you put your money in a 401k plan, you get your deduction inside the window. When you take your money out, you pay taxes on it. That tax revenue is outside the budget window and doesn't get counted when they're trying to figure out how big that number is. So, for instance, one of the proposals is to change the current system to a more Roth-like system where people take taxes on the way in, inside the 10-year window, and then don't pay taxes on the way out, outside the window.
Right. It just seems like any time the governments need to raise money, even in the last few years, they've always gone to the retirement system.
I think one of the important things that's missed in much of the conversation about this is that in an income tax system, you have a natural bias towards consumption because consumption isn't taxed, income is taxed, and earnings on savings is counted as income. The support for retirement savings is a necessary offset to that bias, and if you don't have that there, you're going to distort the result.
So Mike, something that we continue to harp on is that the current system is vulnerable to attack. Many say that participants aren't saving enough, that their investments aren't diversified enough. And one area that it's ripe for attack are those who are saying maybe we should be spending these tax benefits differently. But if plan sponsors can do all those right things to improve the current system, to show that it can work, maybe we can reduce all this noise and reduce the criticism of the system so that these tax benefits can still be used for the current system.
I think the threat to the current system is real. I think that these are powerful people that are saying we should spend these tax dollars somewhere else. And I think this is a point at which employers need to lead on these issues. I think the more we can improve results for participants, the more we can make the current system work. And I think the current system is working, but I think it can work better. And the better we can make it work, the less likely these people, these policymakers that want to take tax benefits away from the current system, the less likely it is that they'll be able to succeed.
Well, I hope you're right. Thanks again for joining. I always enjoy our conversations, and thank you for watching today.